Greetings, ladies and gentlemen. Welcome. I am the Crypto Crow, and today we're going to go over averaging in a bit because, you know, when a market is really indecisive, you're not 100% sure. Are we bear? Are we bull? Are we going up? Are we going down? And we're never really quite sure as to what's happening or what's to be expected in the market. You know, one of the easiest ways to approach things is to average in. Now, apparently a lot of people hear this term DCA, dollar cost average, in or out of a position or series of positions over time, and they don't really quite fully understand it. And I guess unless you're doing it, unless you've done it, and you're you know, then I guess that makes sense. You know, some people just don't quite understand exactly what that means, what it entails. Now, there are exchanges, I know Coinbase, and I'm sure there are others that offer you abilities to do I think like you could do a daily or weekly or even a monthly buy, right? And you can basically set it up on like a debit or credit card or whatever. And you can say, okay, I want to buy so much of this each week or every 2 weeks. And it just basically automatically comes out of your account. That's ultimately an easy way of averaging in automatically. Now, what I'm going to do is, there are other things, like if you want to back test an average in strategy, you can do that with CoinMarketCap. You can just go to whatever token or project you're looking at. Like, for example, this is Cardano. And then you can just go down, and it typically starts off in overview mode, right? So you can kind of see the overview of the project. But if you go down to historical data, you can pick a date range, and then ultimately it gives you the open, high, low, and close price, including volume and market cap for everything on the market. And you can go through historically all the way to the very first day of trading, or the very first day at least CoinMarketCap picked up on its trading, and see what the prices were. And you can say, okay, if I were to average in on a weekly basis from this time frame to that time frame, what would the price be, right? Because what happens is when you enter a crypto position, you might enter in like most retail investors do, and you may say, oh, I got in at the top, or I got in at the bottom, but you never really know 100%. So what I've got here is an Excel sheet that kind of, I have some examples of things here. Now, at the top here, you're going to see a list of a lot of different projects that I look at as being safer than most. Let's just say that. And nothing is 100%. Anything could go wrong with anything at any day. Everything in crypto is a risk. And it doesn't matter if, it doesn't necessarily mean that, you know, investing in crypto, you know, a project's value might go down because the team is crap or they rug pulled, or that's not always a thing. Sometimes just the government decides we don't like this kind of project or the way it operates across the board, not just this project, but any project, because either it helps too many people or it hurts too many people or it's too far out of our control or whatever. And that can drive prices up or down depending on what it's all about. And a lot of these projects, I pulled in data from Messari.io. They really bother me as a company, and I point that out all the time. They are obviously Ethereum bugs. Like they're all about Ethereum. I don't think they're quite into Cardano, Ethereum's biggest competitor, but it is what it is. The data that they do provide is pretty good. I just wish they included everything, not just what they kind of like or didn't like. Let's just say that. It's a very biased platform, in my opinion. But anyway, this is not in any particular order. Let me see if I can zoom in a bit on this. Zoom. Yeah, here we go. Zoom. Let's just go 200 percentile. All right. So you can see this a little more clearly now. So if we're looking at these projects, you can see I've got Internet Computer. Current price when I pulled all this data in was 5.21, so it's $5 and $5.25. Market cap, volume, its all-time high was $551. It's down 99%. So if you were to buy in today and it got back to its all-time high, you're looking at a break-even multiple of 104 times. So that's 104x. Cycle low is 293. Up since low is 79. Okay, so, and you can see the sector, it's a smart contract platform, circulating supply, so forth and so on. So there's a lot of potential upside there. Polkadot, another similar situation here, currently trading at $6.26 All-time high was $406, which is substantial, down 98.4%, and it's at a 64.7 break-even multiple. So you can go through this data and you can get an idea as to what the biggest upsides are. Now, one thing I want people to consider when they're looking at these projects is it's not just about its all-time high, how much it's down, so forth and so on. What you really want to do to get an idea as to what might be worthwhile is go look at like sentiment.com or look at some of these sentiment-based project or platforms that basically tell you what is the perception of this project today. And if you can get some on-chain metrics, what are its on-chain metrics looking like? Is transaction volume going up? What's the trade volume look like? Because generally, if the market cap is good and the 24-hour trade volume is high, that means a lot of people are trading it. And the higher the trade volume, the easier it is to get in and out of a position, which means it's less likely to suffer significant swings while you're in the middle of an order or whatever. So that's all a really big deal to consider. Now, Sia Coin I have on here because this has been a project that has legitimately stood the test of time. Currently at a fraction of a penny. Its all-time high was 9 cents, almost 10 cents, down 95.67%. It's got a 23x multiple. So if it goes back to its all-time high, you're looking at a 23x return on your money. And it's so cheap, it's almost like a meme coin, but it's at the price of a meme coin. It acts like a meme coin in a bull market in terms of its going up and its potential price point, but it has a significantly real use case. It even has hardware miners associated with it. This is a project that I've always actually loved passively. I've used to play with Sia Coin a lot. If I would mess around with a new casino or whatever, I'd just pick up some Sia tokens and use those for fun. I look at Sia Coin as like a spillover project. So if you're trying to invest and keep round numbers and you're averaging in, I throw in like any leftovers into Sia Coin and I just have fun with it that way. To me, Sia Coin is a more educated, longer lasting, more proven type of meme coin, even though it's not a meme coin. It's a legitimate project and it has been around for a long time and it ebbs and flows like the market as market cycles do, and it's good. So anyway, there are a lot of different projects in here, and these are just projects that I'm like, okay, if somebody made me, I would invest in these projects and feel pretty decent about it with a wide range of break-even multiples that could prove very fruitful over time. Okay, now this is not to say that these are going to be the most profitable projects or anything like that. That's not what I'm saying here. Cornucopias is a project I love. I'm a paid ambassador for Cornucopias. I hold I put corn, it's Copy. Copy token currently trading at like 2 cents. It was down to like a penny at one point, which was insane, but you couldn't get it because it's on decentralized exchanges with low volume, and it's really difficult to get right now. I know they're working on centralized exchanges. I know they're working on creating utility cases for the Copy token to basically enable them to be able to get these tokens listed on centralized exchanges, which isn't always easy. And in their defense, I have harped on them, but because it's taken so long to get these listed on a centralized exchange, which I believe we absolutely need, especially before 2024. I understand that what they're building is a world. They're building an entire world, and if the Copy token doesn't have a direct use case at the time of listing, it could be looked at as a security, and we don't want that. They don't want that, and we don't want to see an entire project, something of this magnitude, basically being thwarted because they listed the token before they should have, and the government's like, gotcha. We don't want that. They don't want that either. So in their defense, they're working on it, but they got to build this world, and it's coming together. So World Mobile Token, one of the biggest use cases I think on Cardano right now in terms of global macroeconomics and everything else that these people are doing. I love it. Currently trading at 18 cents. All the numbers look good. Volume's still kind of low, 400, not even quite 500,000. I typically like to see 1 million or more in daily trade volume for a project before I feel comfortable getting in or out. especially in. But I do hold World Mobile Token, and I'm happy with that. Its all-time high was almost $1. You're looking at a pretty decent amount, and I don't have the metrics on here because these are Cardano-based projects, and, you know, well, Masari's like, sorry, are you into Cardano? Well, you're doing it blind because we don't like it. We'd rather go with Ethereum and other stuff. So anyway, it is what it is, but those are the projects that I feel comfortable with in the current market. And I know there are many more, and I know that there are a lot of projects out there that are going to be like, you know, hit or miss, and you can either make a bunch of money with this one and lose a bunch with that one, and it's just a crapshoot. But these are ones that have been around a while that I feel a little more comfortable with, but there's no guarantee in anything. Now, continuing forward, this is a typical average in example here. Let's say I'm averaging into Cardano, okay? Every week, I'm buying a lot of Cardano. On February 11th, 2023, my last purchase, it was 36 cents. And let's say I started on January 14th of 2023, and the price was 35 cents. Every week, I buy more Cardano. Every week. 1 week, it's 36 cents. This week, it's 39 cents. This week, it's 40 cents. All I'm doing is I'm taking every week. Okay, so that's 1, 2, 3, 4, 5 weeks. I am adding the sum, dividing by the number of weeks invested. That's it. I get an average of 0.37 cents. So even though 1 week I bought at 40 cents, another week I bought at 35 cents, so forth and so on, my average in is 37 cents. So even the week I bought at 40 cents compared to the week I bought at 35 and everything in between, that average price for my total sum is 37 cents. So if I bought 1,000 here, 1,000 there, 1,000 there, 1,000 there, 1,000 there, that's 1, 2, 3, 4, 5. So that would be 5,000 ADA at an average price of 37 cents. That is the very simple concept behind averaging in or averaging out. You're never necessarily missing or hitting the top or bottom, but you're creating an average over time. In a bull market, it would be an average up. In a bear market, it would be an average down. And when you get significant triggers in the market, like in the video yesterday where I talked about the Wyckoff system, where I believe we're at, how I believe that, and you know, just to update you real quick, so it is still Sunday for me. I'm recording this in advance, and I'm going to show you this because I did this video, and if we're looking at this on a daily chart, you can see this is shaping up where we might get a little bit back up and above 22,000 before we come back down, and we go up and come back down, but ultimately coming all the way back down to a new low. And so here's what's happening. Let's say I'm wrong about this and the price goes up and then it comes down a little bit more and then it goes back up and it's just really, really choppy, right? I don't know what to do. I don't know if it's going to go up higher for a new high or if it's going to go low for a new low. I don't know. But when I'm watching stuff like this, let's say we do come all the way back down to about 20,800. I might continue averaging down. But if we get to like 19,000 or maybe even 18,000, I'm pretty sure we're not going for a new high anytime soon. And at that point, I may continue averaging in. But let's say I've got $25,000. I get messages all the time. I've got 20 grand. I've got 25 grand. What do I do? And I'm like, I can't tell you that. All I can do is show you in a video what I do, what I'm thinking, that kind of thing. But if I've got 25 grand, I've been averaging in every week for 2 months, and then month 3, we go all the way down to new lows. Guess what I'm doing? Whatever I haven't spent to average in to that point, I'm probably going to put the rest of it and hit that mark. So if I started with 25 grand, I've invested 5 grand, you know, averaging in week after week, and then boom, you know, 6th week, we hit a new low. I'm basically just going all in at that point. And that's my strategy. That's ultimately what I'm doing. I can average in little by little as I'm watching the market. And then maybe, so like right here, you know, if this Wyckoff accumulation is to, is to be rejected, well, then we might close above 25,000, which would basically take us out of this Wyckoff situation. Okay. I don't think that's going to happen. I think this is going to continue falling in line with this Wyckoff system. And so, but if we do break above that, then I'm like, okay, this is all bunk. And then I might just go all in at 25. You see what I'm saying? So that's where I'm when I average in or out, it's basically until I get confirmation of where I am in the market, and then I might make a much bolder move. I'm not necessarily trying to average in over a year-long period, even though that could be beneficial, especially averaging in prior to Bitcoin's halving. But if we wait until Bitcoin's halving, the price is likely going to be much higher than it is now, unless we're doing something like this and we're creating a new low. So that being said, if I'm going back into Excel, I'm going to go back into this example and I say, okay, well, how do I break down my investment? How do I decide what's important? Well, it depends on the number of positions you want to create. Creating an auto weekly buy for any given project or a number of projects can be a little time consuming at first. Maybe it takes you 20 minutes, but then you set it and forget it and you don't have to worry about it anymore. And then maybe what I would do at that point, so let's say I'm doing 500 a week, okay, which is probably a lot for most people. But I might say, okay, 100 into Cardano, 100 into Internet Computer. I might do $50 into Hedera, $50 into a Polkadot. Quant, I might say, well, that's the most expensive thing on the list, so I might just buy one quant every week, right, at whatever the market price is. And then basically from there, put whatever's left based off of the price of quant into Sia coin. And then just do that. So week one, and then maybe week two, I'm doing some Cardano, Algorand, Sandbox, Decentraland, Polygon, and then the rest in Sia coin. And then week three, I'm going back to what I did in week one. So maybe these are a bi-weekly buys instead of weekly. It doesn't really matter how you structure it. You could say, you know what, I'm just going to spend one afternoon. I'm going to say, okay, I've got 15 different projects that I want to get into, and I'm just going to set up, I'm going to say I'm going $500 a week or $500 every 2 weeks. And I'm going to divide that evenly amongst all of these as best I can. It means that if the price goes up, you're going to get less of the tokens. Okay, you're going to get less Cardano for the same money, but if the price goes down, well, then you're going to accumulate more for the same money. But that's okay. Either way you slice it, that will continue to be an average over time. And then to be on the safe side, because I've always told people, you use exchanges like a public restroom. You get in, you do your business, you get out, and that's it. You don't hang out. You don't wait to like smell the next person. You just go, right? So that's the way I look at exchanges. So I might say, okay, once a month, I might go into my account and then just pull everything out and put it into cold storage, or put it into, maybe a quote unquote hot wallet that I have on a laptop that I don't do anything with, but use as a wallet, right? And then stick that in the safe or the bank, like whatever you do with it, right? You stick it somewhere where it's secure. And that's ultimately what you would do here. You average in week after week or every 2 weeks or whatever. And then every month you go in, you clear it all out, put it in storage somewhere. And that's really it in a nutshell. I mean, that is the very nature of averaging in. So, and you could do the same thing, when you get close to a market peak. You're just doing the opposite. Maybe you're just selling a little bit every so often over time, making sure maybe you don't hit the top. Hey, I think the peak is in. We could go higher. I'm not sure. What do? I just average out over a period of time. And that is ultimately what I did at the last peak, because the day I called the peak, and the double peak, well, I called the peak getting on a plane with all my computers and everything boxed up. I couldn't do anything. And then when I got to Puerto Rico, I was basically so sick with vertigo, I couldn't even get out of bed practically for 2 months. So it was a really rough time. That heat there, man, just wrecked my big ogre. I was so wrecked there. And then, I got meclizine or whatever, and it helped clear things up. So definitely was a mistake for me personally to go through all that, do all that, I'm just going to keep myself where I'm at this time around. But anyway, that's ultimately the goal of averaging in and averaging out. And that's a very, very simple way of breaking things down with very simple strategies. The idea is you're just creating an average price in and an average price out somewhere at a good position over time. And that's it. Until next time, crow your coins, and I'll see you soon.